Hello, Oracles. I still do not have my voice back entirely yet, so I'll do my best here to get through this. Hopefully, you guys can hear me. But today we're going to be discussing some more gaps. It's our Monday stock gap video, and we're going to be going over AMD and Meta. Now, some surprising things that we can see, and again, I've talked about it before, is gaps aren't always behind us. Sometimes they can be above us. We are going to see that with AMD today, where there's gaps that are above us. And again, gaps are going to fill 9 out of 10 times. So even the gaps above us are most likely going to fill. Now, chances are, because when you look at the stock market, as long as you have a good, strong company, the stock market typically goes up and to the right. So if you have a good company, it's going to go along with that. So eventually it will fill those gaps over time. It's just going to possibly take some time. In the case of the dot-com bubble, that took about 10 years for some companies to come back up and fill those gaps. So I'm not saying that's going to happen this time with AMD, but it's one of those things where if you have faith in the company that's strong, it will come back up and fill those gaps. So when you see those above you, you could take a look and say, hey, if there's a gap at 30% above us, buying right now could potentially give me a 30% upside at some point in the future. Again, you've got to do your own due diligence on that one, but you can take a look and see for yourself as whether you want to buy that, and you can use these gaps as an opportunity to see how much upside there could potentially be in that stock. So before we get into it, again, for you guys who don't know, gaps fill 9 out of 10 times. Gaps are created when the stock opens higher or lower than it closed the day before. So for instance, if a stock closed at $100 one day, opened at 105 the next day, you have a gap from 100 to 105. Typically, the stock will fill the next day, maybe in the first 30 minutes because it's so volatile, but sometimes it does not fill, and then it could go days, weeks, months, or even years before that gap ends up getting filled. So we discussed that before with Tesla. It took about 2 years, and we had a lot of gaps filled all the way down to $110, and then we came back up from there very strong. But you never know what's going to happen in the stock. And this is just something to take a look at as far as one of those small tools that you can use if you're going to be a swing trader, options trader, or if you're looking for a better buying position to get into a stock for a long-term position, or if maybe you're just wondering why the stock is moving down a certain way and you're trying to keep your emotions out of it and you're just trying to understand what's going on. Either way, this is a little tool that I use for myself and something that you guys can use as well. So let's get into it. All right, so again, here is AMD. So we're looking at gaps above us right now. So we have a gap here at 137.40 that needs to get filled. And you can see this is a big debt cap bounce that's been going on for AMD. And we saw the same thing going on for Tesla, which created a whole bunch of gaps above us, which we have now filled. And now that gap there was created on December 6th. Before that, there was a gap that was created at the end of October on the 29th that goes all the way up to 158.94. And now here's another position that you can see here. So this gap here is still here up to the 174.53, but it tried to get filled. So it was partially filled when this came all the way back up to 174.06. But we are still looking at this gap here to the 174.53. It's a tiny little gap, but it is still existent because this did not come all the way up to fully close it off. And then you go all the way back to March 8th of this year, and you can have a gap all the way up to here at the 205.60. So again, these are very high gaps. And I do think that these gaps will fill over time. So if we're sitting around this $125 mark right now, you're looking at about 30 to 40% upside when you're talking about AMD. Now, again, nobody knows when these are going to fill. This could take 5 years to come back up to this level to fill. But if you're a long-term investor, this could be a good buying opportunity. And you say, hey, I don't care if it's going to take 5 years. I see a 30% upside as being pretty strong over that time frame. Totally up to you and what you want to do. And again, maybe this comes back up to the $200 next year, and then you get 30% in a 1-year turnaround. Again, nobody knows for sure. And I did miss it. There's a tiny little gap here that's the 188.05 as well. And then you go prior to this, January of 2023, there's a few gaps that are below us. You've got this gap down here to $75 on February 1st of 2023. So then you can ask yourself the question, we're on a big debt cap bounce now. We could potentially be getting into some uncertainty next year when it comes to the stock market, maybe a recession. Are we going to come down and maybe fill these gaps before we end up going up to fill the gaps above us to that 203 level? We saw that happen with Tesla, so we don't know. So maybe AMD is just on a similar course. Now, seeing AMD go below $100, I think would be completely crazy based upon the growth that they have seen when it comes to their fundamentals. But the stock market can be extremely irrational. So you never know what's going to end up happening. And maybe it does end up coming down to fill these $70, $75 gaps. And then we come all the way back up. Again, Tesla did a massive 4x over the last couple of years as it filled gaps all the way down and all the way back up. So that could be a potential when it comes to AMD. So then if you're going to be buying the stock down here at the $70 to $75 range, then you go all the way back up to that $200 range, you could be looking at a potential almost 3x on this. And so again, nobody knows what's going to happen. These are just kind of points out there to say, hey, these gaps do exist. They fill 9 out of 10 times. There's at least 10 gaps that are going all the way back to February of 2023. So chances are some of those are going to get filled. It's just a matter of, do we fill ones down below before we come up? Or do we bounce from here and go up and fill the ones above us and never come back down to fill those gaps at 75? Again, these are just things to put onto your radar as potentials. All right, so now we're going to take a look at Meta, who has been on an absolute tear over the last couple of years as well, creating a lot of gaps. And again, the Mag 7 has created a lot of gaps. We went over the NASDAQ, we went over the S&P 500. The indices themselves also created gaps. And when you look at the NASDAQ and the S&P 500, who are heavily weighted with Meta and the other Magnificent 7, that's why a lot of people are thinking maybe these here have kind of run a little bit further and we need some broadening in the market, which would soften these to come down and potentially fill some of these gaps. So taking a look at Meta alone, Meta didn't have that massive jump that we saw when it came to a lot of the other stocks on election day. So we did see a bit of a green day here, but then it sold off immediately and has since recovered and come back up and then sold off since then. We had a high of 637. We're now down under $600 again. But you go prior to that and you got back here on September 18th, we've got a gap that goes down to 543.76. Prior to that, on the 11th, we have one at 512.22. You go prior to that, and you go all the way back to April of this year, and you had this giant sell-off which came down. And then, of course, again, this was a gap above us that since filled after that over the next month. And now we start getting into some massive gaps that were created as well. So you go back to February 1st of this year, and you've got a gap that goes down to the 398.98 mark. A couple of smaller gaps here a couple of weeks earlier at 375, 367. And then you come back here even further into the last year. And in 2023, April of 2023, we've got a gap that goes down to 213.30. Prior to that, you have a tiny little gap at 200, another one here at 183, another gap that goes back here to February 1st of 2023, same time frame as that AMD. And you got one down to here at 153. And then 142 before that. And so looking at that, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 gaps right there that we just went over. Go back to the beginning of 2023. Again, gaps fill 9 out of 10 times historically. So looking at that, going back to the beginning of February of 2023, we have known that we have seen gaps created that were over 2 years old that got filled because of crazy economic situations that were going on. So could we potentially see that? We could. And again, this is why it's on my radar. I don't know if we're going to fill that. Obviously, Meta is a great company. They've been very strong. There's no reason fundamentally for us to say, hey, we're going to pull down to those levels. But when you get into a recessionary period, all bets are off. You never know what's going to happen. We saw this in 2022 when the Fed was raising rates. We saw a giant bear market and metal was down about 60 to 70%. So there's nothing that says that can't happen again. Dropping from $600 down to $200 is about a 65% drop. That's what we have already seen when it comes to Meta. There's nothing to say that we can't see that again. So again, this is why it's on my radar, and this is why Warren Buffett always says the stock market is a transfer of wealth from the impatient to the patient. Some people are going out there right now thinking that these are unstoppable stocks when it comes to the Magnificent 7. Some say Magnificent 8 if you throw Broadcom in there. But you have to be realistic and understand that just because that these stocks are seemingly pretty awesome right now doesn't mean that they have to keep on going up forever in a straight line. They could always come down. Every 10 years, we see a massive pullback, and we did see the COVID crash, and then we saw the bear market of 2022. So maybe you can justify and say, hey, that's where we did see those opportunities, and we won't come back down to those levels. But when we see the massive run since then that came up over the last 2 years, historically, when you see 2 massive years that we did, you typically see a weaker year or even a down year following that. That's where we're in 2025 is a potential weaker year or a down year. Now, again, just because it happened through our history doesn't mean that it's going to happen again. But those are one of those things I take a look at and say, this has happened before. Historically, this is what happens. And this is what's on the radar when it comes to gaps. Maybe we get some better buying opportunities coming up. And maybe the $600 that we're at right now will end up falling down from this, creating some gaps above us as we saw in 2022, and then fill all those gaps on the way back up, just like we can see with AMD, just like we saw with Tesla recently. So that's why I put these on my radar. And again, I don't know. I still will buy in when my portfolio tells me to buy in. But right now, based upon my portfolio, all of these stocks that I'm looking at are pretty lofty. So Meta, even though it pulled back a little bit, that is still pretty lofty right now. So there's just the things that I'm paying attention to right now, where it seems like the market is in a stretched valuation when it comes to the broad market overall. And a lot of that could be created by the Magnificent Seven in the technology sector when it comes to AI. People think we may be in an AI bubble. I don't know if we're in a bubble per se, but maybe we've been a little more inflated than we should. And we just need to deflate a little bit until we actually get some revenue generation coming in from AI. This is very much like the dot-com bubble, where we saw a lot of internet companies that were out there. Now, granted, if you had .com on the end of your name, you were going to be getting a lot of investors, even if you didn't actually have any substance whatsoever to your company. That's not the same case when it comes to AI. But when it came to the internet, there was a lot of future growth that was built into that with the potential of what the internet had to offer. And sure enough, we did achieve that potential over the next 15 to 20 years, but it took 15 to 20 years. That's why we had a lost decade after the dot-com bubble pop, because when that popped, it took a while for the actual revenues to be coming in for the internet ability. There was a massive tool and a game changer worldwide. It just took some time to actually generate the revenue coming in and for people to understand, all right, how can we utilize this to actually drive business? That's what happened over the next 10 years. Then we got the housing market crash, and then we since recovered from there. And now I think we're going to be in a very similar situation when it comes to AI. Maybe we don't have a lost decade, but I think there's a lot of potential that's getting built into a lot of these valuation models for people. And we don't actually have the revenue coming in yet. Very much like Tesla. I love Tesla long term. I think that they're going to solve FSD. I think that they're going to get cybercabs on the road and generate significant revenue from that. I think they're going to get Optimus out there and generate significant revenue from that. But we're not there yet. And I think there's a lot of people who are pricing that already into the stock, and we haven't gotten there yet. And then there's a lot of other things like, what else can AI be used for? And we just haven't seen that revenue generation coming in. We've seen a lot of the expenses out there and people building up that infrastructure, which is phenomenal, which tells me that this is actually something that's going to happen. But we haven't seen the return on that investment yet. And that's one of the things that I'm waiting for, is to see the return on that investment. And until we get to that point, I think we're going to end up just seeing a lot of potential speculation built into these stock prices, thereby creating a little bit of this inflation going on when it comes to those prices and stretched valuations. Then we're just going to kind of wait and see the earnings for next year and say, hey, we've invested all this money, but we haven't seen that return yet. And then those year over year numbers aren't as good. So then we end up seeing a bit of a sell off in those stocks, and that there could be part of the catalyst that goes into a recession that gets created that brings the stock prices down even more. So that's just my thoughts behind all of that. Again, I could be entirely wrong on this, but just based upon all the historical data, based upon all the data that we're looking at right now, kind of just seems like that's where we're at currently. And we just need a couple of years to kind of filter our way through it. But over the next couple of years, we could end up seeing a lot of prices coming down, fill these gaps, and then rebound and come back up from there, and then fill the gaps that we created above us. That's just my thoughts. You guys can let me know your thoughts in the comments below. And if there's any other stocks that you want me to do a gap analysis on, please let me know, and I'll put those on the list to take care of as well. Thank you guys so much for watching. I appreciate all of your support. Have a great one.